Robinhood is now a public company whose stock sank by more than 8% on the first day of trading, but there are others who have performed worse this year. In this video, we are going to talk about Robinhood's post IPO update, its bet on Generation Z, some of the challenges it faces, and at the end, can you generate long term wealth? Hi, my name is Sunny, and I make videos that affect a common man financially. If you are new to this channel, please smash that like button as that will help me with the YouTube algorithm and it will be highly appreciated. I know Robinhood had a very dismal first few days of trading where it lost 8% as compared to its IPO price. But believe me, it is not alone showing this performance as there are dozens of companies who have performed worst this year. Robinhood's IPO offer price was $38 a share, but it went below $35. ARK Invest bought about 1.3 million shares from open market during these times, which shows its long-term view of the company. In simple terms, it means nothing for the stock, but maybe for the retail investor, they did not get the returns they were expecting on the listing day, especially the ones who wanted to flip it on the first day of trading. The company had set aside 35% in the stock for retail investors, but there were several different factors causing downward pressure on its stock. The employees and directors could offload 15% of the shareholding on the first day. It is a human nature. If we have got some stock options, as employees, we think we are stock rich while cash poor. All of a sudden, when we have got an option to monetize it, why not have a little cash on the sidelines? Keep on doing what you are doing right now, which I think has brought an additional selling pressure on the stock on the listing day. The founders also sold about 1.25 million shares each on the day of IPO. Some of the experts are saying these are some of the possible reasons for poor performance of the stock on its IPO day. I have made a detailed video about Robinhood as a company and how its zero commission brokerage account is doing wonders, especially for its younger millennial customers. I'm going to leave the link in the description too. Please do watch it and then you can come back and continue watching this video. A $35 billion market cap for a 8-year-old company, I would say, is a bet on its biggest customer base, the Generation Z. It is heavily reliant on payments for order flow where it receives revenue in exchange for routing retail orders to high-speed trading firms. This type of business model enables them to make money by routing the orders rather than charging the customers who get free brokerage trading accounts, which some experts are of the opinion has got inherent conflict of interest as a business model. The key for Robinhood is if it can hold on to the younger customers and how fast it can add more millennials or Generation Z into its trading app. It is a known fact that millennials or Generation Z have got lot less money at their disposal for trading as compared to little more mature customers. According to Robinhood's IPO filing, more than half of its customers never had a brokerage account before. So in a way, they are paving the way for younger generation to invest in the stock market using its trading app. It's all in the hope that because of their younger age, they are more likely to stick around with Robinhood all their investing life. The younger generation also is known to have little higher risk tolerance, which is considered positive for Robinhood too. That is exactly the reason at some times these younger customers have gone overboard and as a result they face financial hardships. There are some challenges that Robinhood is facing right now and two main ones are: number 1, regulatory scrutiny. Robinhood said in its SEC filing it faces over 50 lawsuits following its actions taken during the meme stock frenzy of early 2021, where it temporarily halted trading for stocks like GameStop and AMC. In March 2021, trading platform crashed during times of extreme market volatility where the customers were not able to make trades. It settled with Financial Industry Regulatory Authority, and this is not the first time Robinhood had some issues with regulators. Number 2, increased competition. Its rapid growth has encouraged the entrenched industry players like Charles Schwab's, E-Trade, etc. also to slash their commissions and thus offer discount brokerage in the United States. These companies might have lost money when they slashed their commissions, but since their average account size is many times bigger than that of Robinhood, thus they hold larger assets so they can make more money by cross-selling. As a matter of fact, its IPO fell flat, but there is a continued growth in its user base in spite of all the challenges Robinhood faces. The driver for its business is the largest intergenerational wealth transfer in the history of the United States, where younger generation takes over the inheritance from baby boomers. This newer generation normally places more importance on trading rather than saving as compared to its predecessors. In my humble opinion, based on the future growth potential, in the long-term basis, Robinhood stock looks promising. ARK Invest bought more stock today on the day of recording, which is known to take a long-term view, thus is a good sign for Robinhood stock. As a disclaimer, I bought the stock when it crashed post-IPO, but always do your own due diligence. This is me and everybody has their own risk tolerance. Talk to a financial advisor before investing, as I am not. This is my take on the topic, Robinhood's IPO update. If you like the content that I make, please help me and my channel by liking, sharing and subscribing to it. See you next time in the next video on your own channel, Sunny Snippets.